Hope everyone's doing well and had a good end of their trading week. This is the Emini review for Friday, May 31st, 2024. And today's an interesting day. It's Friday, it's the last day of the month. So it's the last day of the week, last day of the month. And let's start with the monthly chart. You can see the month of May closed a bull bar, but it went above the prior 2 months, so the prior 2 bars, and found sellers above and closed below the highs of those bars. So as strong as this rally was, it was 2 legs up, maybe high in a trading range over here, and then this was a strong rally, but then we had a disappointing bar here. So the odds were, when we did rally again, probably be sellers above because you have bulls who bought here, disappointed, and if we get back to their entry price, the odds are we'll go more sideways as they exit longs. So the bar, it's a bull bar, but again, the tail on top is a sign of weakness, and it's a bull breakout, but the breakout closed below the breakout points, which is the highs of the prior 2 bars. I think more likely we'll go sideways. But this was still strong enough up that the bears need to do more before there's any major reversal. For the weekly chart, again, strong rally and then a weak low 1 signal bar. So it's the top of a trading range, but this is a trading range bar. And after this tight a channel, it's really a spike. And after that spike, the first reversal down will probably fail. And then you get a bad sell signal bar, and it's a trading range bar, so the odds were there were buyers below. And you can see what happened on the weekly chart today. For the daily chart coming into the day, I've been saying the market's in a trading range. I thought the market might go a little lower and test this breakout point. This was the May 7th high. There's a breakout point here. Market's probably in a trading range here. You can see we have a lot of overlapping bars, bull bars, bear bars, lots of reversals. Now we're getting a bear breakout. We've had a couple of gaps down over the past several days, and we're getting a bear breakout, but it's possible we had a big surprise here, leg 1, pullback, and then a second leg, leg 2. But when you're in a trading range, second legs, the context for second legs can be dangerous. You can get second leg traps in trading ranges, and the market can move quickly, in this case down to support, and it can look strong, but it could simply be a sell vacuum test of support. So I thought this area was probably support. You can see we ended up going a little lower. It looks like we actually tested the low of that day. It looks pretty close. But I thought coming into the day, we're probably in a trading range. So even though we have a couple legs down for the bears, I thought eventually, soon, the bears would be disappointed and we'd probably bounce and go more sideways. Look at the past 20 bars or so. Most of the bars, really all the bars from here, May 3rd, all the way to yesterday, the 30th, all the bars are above the moving average except for one day. So we had a lot of bars. The bulls are controlling bars above the moving average. Bulls are paying above the average price. The odds are, if we test the average price, the test will be bought. And we obviously went further down, testing other support before reversing back up. Remember, this was a tight trading range up here, and that means it's a magnet. This was an area of agreement between the bulls and the bears. So any breakouts of a tight trading range, you know, whether if it's a triangle, the apex of the triangle, or simply the middle of a tight trading range, will typically act as a magnet because that was a fair price. And you can see here's the middle of the range. The market went far from it, and it's going back toward the middle of this range. For the 5-minute chart today, the market was in a trading range yesterday, and then we had that late breakout but bad follow through, so going more sideways. Then we had a gap up after a second reversal up, and bar 1, it's a doji bar, but completely above the moving average, probably buyers below. The gap up is a second leg, so possible second leg trap, leg 1, pullback, leg 2, in the middle of the trading range. So probably also sellers above bar 1. And then bar 2 was a shaved bull bar, so bull trend bar that's strong, no tails above or below, completely above the moving average. That's good for the bulls, but the context is still bad. There's a lot of bars to the left. There's a lot of resistance to the left that the bulls need to break out of to convince more and more traders that this is actually a breakout and we're going higher. For now, it's inside a trading range. It could simply be a buy vacuum test of resistance. So right now we have a bull breakout, but above a trading range bar. The high of bar 1, there were sellers above. The odds are we'll at least test that, and the bulls need follow through on bar 3. And then bar 3, the bulls get follow through, but it's a small bar. So the bulls can say they got follow through, but why is the bar so much smaller than bar 2? Why is there a tail above the bar? So why were there sellers into the close of bar 3 if this is a strong breakout? So it's a little suspicious so far for the bulls. Strong enough up, it'll probably get a second leg. But again, possible that it's leg 1, pullback, and then leg 2 with the gap up, pause, and then a nested second leg. But this is all tight enough that the first reversal down will probably fail. Probably sellers, probably buyers below 3. But in the opening range, on the open of any day, lower probability events happen. So any breakout, no matter how strong it is in general, has about a 50% chance of reversing. So that's the danger of, especially if you're buying here and buying high, like buying the close of bar 3, I think it's probably better to look to buy a pullback if you're buying at all. But again, the context might be getting high in a trading range. And then bar 4, traders actually sold the close of bar 3. So big bear bar, bad sell signal bar for stop orders below bar 3, but a good entry bar. But the only problem with this entry bar is there was support at the moving average. So the bar bounced, there's a tail below the bar, and it's completely overlapping bar 2. And obviously, big up, big down. Look at the opening range today. You know it's a trading range. So traders are buying low, selling high, and scalping. Probably going below bar 1, but if we do, probably find buyers below. But the only problem with buying below bar 1 is that if we are in a trading range, this could be the high of the range. The low could be all the way down here. So usually not wise or not ideal to really do anything in the middle of the range, except if you're selling high, take profits. If you're buying low, take profits. But as far as initiating trades in the middle of trading ranges, I think that's aggressive. You really need to know what you're doing, and you need to be quick to make decisions. As far as bar 4, big enough surprise, it'll probably get a second leg down. If we do go above bar 4, there's probably sellers above, probably sellers at the low of bar 3. Bulls bought below bar 3, they got trapped on 4, so there's resistance above. Then follow through selling, bar 5. So bear breakout 4, follow through 5. Smaller bar, but good follow through bar. It's a shaved bar. Traders immediately sold the close of bar 4. There's hardly any overlap. And that's a sign of urgency. Still, the context is not great. You're below bar 1, which was a trading range bar. We went up, we're going down. Probably a trading range here. But again, I will say it's possible that the low of the range is down here. And then you have the low of yesterday, which is also a magnet. The market will probably go there to see what's there. 6, more follow through for the bears. It's only a doji, but at least it's not a bull bar. Now we have a 4-bar bear micro channel. Bulls are clearly trapped below bar 3. Anyone buying the close, anyone buying up here is trapped. And this breakout's strong enough that any pullback above a bar will likely find sellers. 7, it's a buy reversal bar, but another bear close. And the micro channel for the bears continues, probably sellers above. Now the bears are getting consecutive bars completely below the moving average. And that's good, but the moving average is basically flat. And you just look at the chart, you can see there's a lot of overlapping bars, and the market's in a trading range. Bar 8 is another trading range bar. It's a small bar and an inside bar. Inside bars, lower probability for breakouts. The odds are there are sellers above and buyers below. But as far as buying below, this is still a micro channel. The odds are we're going at least a little lower. And if we do pull back, there's probably sellers above, sellers at the moving average, sellers maybe below bar 1, any bull buying bar 1. If they weren't quick to get out on 6, they're also trapped. So there's trapped bulls above. But there's a couple problems with this bear breakout. The first two bars, they're okay, but the tail on bar 4 is a problem. If this is a strong bear breakout, why are traders buying the close of the breakout bar? And then bars 6 through 8 are all trading range bars, and that's obviously not a sign of urgency. It'd be better if the bears had bars closing on their lows with little overlap, but the past 3 bars have overlapped and gone sideways, but still probably sellers above. Bar 9, we're selling off quickly on bar 9, but it could simply be a vacuum test of yesterday's low. We're not quite at yesterday's low. We know we're probably going at least a little lower. What about bar 9 being a second leg trap? It could be, but it's still a micro channel since bar 3, so this could all be one leg. And it is one leg and one breakout on a higher time frame. And more clear on a higher time frame, like if you looked at the 15-minute chart, this is 3 bars into the day. We're on bar 9. If you really want to buy the close of the 3rd bar of the day, of course not. It's 2 big bear bars closing near their lows, so not ideal. We might bounce. We're in the low of the range, possibly. But still, this is all strong enough that the first reversal up will probably fail. As far as buying pressure, since really bar 3, bar 4 is a decent bull bar, but that's the only decent bull bar all day. So the bulls need to do more. Bar 10, we're going lower, testing the low of yesterday and breaking out of it, but closing above. So not ideal for the bears, but obviously nothing to buy for the bulls yet. No one's going to buy above bar 10. There's sellers above. Bar 11 overlapped bar 10. So some traders will see this as a breakout and then a pause. We went sideways, and then another breakout. So it's 2 legs down. But on this chart, there's also no technical pullbacks. No bar traded above the high of the prior bar since bar 3. So now we have a micro channel that's been about 9 bars. The longer a micro channel goes on, most micro channels end between 3 and 7 bars. So the more bars that get added after 7, the odds of a pullback become greater than continuation. This is extreme behavior. We're getting far from the moving average. The odds are we'll pull back soon. That doesn't mean you buy the close of bar 11 aggressively, betting on a pullback. But if you are short, it might be wise to look to take partial profits. And then bar 12, it's an inside bar, but it's a sell reversal bar with a bull body. It's a low one, but possibly 2 legs down. And we just broke out of the low of yesterday, and we're testing the low of yesterday. We couldn't quite get there. And the big tail on top of the bar, there's probably sellers above, and the low of yesterday is resistance. But bar 12 is not a great low 1 short signal bar either, so there might be more buyers below. But as far as buying, this is a really tight channel. You know it's a breakout on a higher time frame. So whenever there's a tight bear channel, your only options are short or flat. 13 triggered the low 1, and it's a bear bar closing well below the low of bar 12. So any trader that did buy below bar 12 is disappointed with their entry bar. Probably sellers above bar 13, still a micro channel since bar 3. So the behavior is extreme. Still a tight bear channel. The odds are there are sellers above, and we're going at least a little lower. And then a bull reversal bar on bar 14. Good looking bar, but fairly small, not above average size. And again, tight bear channel, so more likely a bull trap. Sellers above. It's probably a profit taking bar and not aggressive bulls starting to buy. Inside bar 15. So still the micro channel continues since bar 3. It's a inside bar, and that lowers the probability for breakouts. So there might be buyers below. We're getting far from the moving average, and it's an extreme micro channel. It's extreme behavior that will not last forever. But again, that doesn't mean buy aggressively. That means think about maybe reducing your risk and taking profits on shorts. One way to reduce your risk, let's say you're short here, one way to reduce your risk is to take profits to lower your position size. Of course, the other way, you can tighten your stop. 16, another bear bar. It's a bear reversal bar, but basically a doji. The past 4 bars have overlapped, and it's a small, tight trading range. There might be buyers below, but it's minor. This is a possible final flag, but still a tight bear channel. The bulls need to do more before thinking about buying. 17, small trading range bar. You really want to buy above 17? Of course not. You know there's probably sellers above. And still a micro channel since bar 3. So it's a 15 bar micro channel. That's fairly impressive. You know the odds are the first pullback will get sold. 18, a little bit of a surprise. It's profit taking by the bears, probably not aggressive bulls buying. And they're selling into the close of bar 18. And look where bar 18 is testing. I said these 4 bars were sideways. It's a trading range. This would be the high of the trading range. You can see where bar 18 tested. We went above bar 13, found sellers. So the market's in a small trading range here. The odds of a breakout to the downside are slightly higher because of the bear trend going into it. Bar 18, there's probably buyers below bar 18. The market's far from the moving average. So traders have been selling far below the average price for fairly average price action. The past 5 or so bars have been sideways. So we might have to go sideways to up before we find bears willing to sell. And then 19, bear bar completely reversing bar 18. So remember 18, probably just high in a trading range over here. And with all this selling, you get the first bull bar since bar 2. So in all of this, you have a couple small bull bars, but then you get a bull bar 18 with sellers into the close. And you can see what happened on 19. Traders basically saw that bar as a discount. It's a deeper pullback than we've had since the micro channel started. We haven't had any pullbacks until bar 18. The odds were there were sellers above, and the first pullback would lead to a second leg. Bar 19 is the minimum second leg, so it's all leg 1, pullback, leg 2, testing the low close. The past 7 or so bars have been sideways, so we'll probably go more sideways to down here. 18 was a bad stop order sell signal bar, so there might have been more buyers below. And then 20, bull reversal bar, closing near its high. Some bulls will argue it might be a wedge bottom. We have a lot of lows here in this channel line, bouncing on that line, and now we have a decent signal bar. But still, if you look to the left, you know the context is bad. The best case for the bulls Maybe they get high in this trading range. Maybe they test the close of 18, but this is not a major trend reversal setup. Probably sellers above, but they may not come in until up here, maybe not directly above the bar. 21 triggered the buy, but is a disappointing entry bar. But now 21's a low one short, low in a trading range, far below the moving average. And now the bears have one bear bar in 5 bars, so that's not ideal to be selling. Probably buyers below. 22 broke below 21, triggering the low one. It looks like a strong bar, but it's not breaking out of the current low of the day. It did break out to a new low, but did not close there. The bears need follow through. And the fact that 21 overlaps all these bars is not good for the bears. And then bad follow through 23. The bears did not get follow through. The bulls, they're still arguing the same wedge bottom, but it's minor. So the best case, we bounce up here and then probably continue sideways to down. So probably sellers above 23. It's a minor reversal at best. But the bulls are now controlling more bars than the bears in the past. Maybe 7 bars. 6 or 7 bars. The bulls have controlled 5 of them, and the bears have 2. $24 was an inside bar, so lowers the probability for breakouts, probably buyers below and sellers above. The market's in a triangle, and it's sloped downward. And in general, bulls are looking at this as a wedge bottom, and the pattern is still minor. So a lot of these bars overlap, but we've been completely below the moving average. And there really hasn't been a credible major trend reversal stop order buy setup. Probably sellers above 24, probably continuing more sideways to down. 25 broke out to the downside of that triangle, but pulled back immediately. So it's a weak breakout bar. But 25, do you really want to buy above 25? Of course not. It's a weak signal bar. 2 bear bars. It is a buy reversal bar, closing above its midpoint, but the signal bar is weak. If you do buy above 25, you need your entry bar to look like bar 2, a strong bull bar, to make up for the bad signal bar. And then instead, we triggered the buy and immediately found sellers above. So 26, low one short, but bad context. Lots of overlapping bars for the past 10 to 12 bars. Market's channeling down, and the channel is tight, but it's not very strong. So we had a bear spike, then a channel. And we know that channels evolve into trading ranges. I'll keep the low of yesterday drawn as basically the high of the channel, the start of the channel. Bar 12 was the start of the channel. Bear breakout 9, 10, 11, pullback, the start of the channel, and then here's the channel. The channel phase of the trend is the second part, the weaker part. So the breakout, 9, 10, 11, the strongest part of the trend. And then 12 through 26 so far is the second leg. And the second leg is less clear. There's bull bars and overlapping bars. And we're in that 40 to 60% directional probability range. Still not great to buy here, nothing really to buy, but also not above average bearishness, and we're far below the moving average. So we might need to go more sideways before strong bears look to sell again. This looks like a bear leg or a couple of bear legs in the trading range, maybe 1, 2, 3, maybe 4 legs down. But a lot of overlap, that's the point, and if we are in a trading range, we could come all the way back up here. $27 was an inside bar, another low one, but this time with the bull close. Not a great stop order sell, probably buyers below, but also probably sellers above. Another inside bar, 28, so II pattern. It's a possible final flag. It's a tight trading range after a bear trend that's gone on for over 20 bars. And the selling is really drying up. You can see since from bar 4 to bar 11, market fell almost 39 points, and that's over 8 bars. And then after 18 bars, it fell 9.5 points. So you can see, obviously, the momentum is slowing. Strong selling, so possible sell climax, then a pause, sell climax, or a spike in channel. The odds are this will evolve into a trading range, and we'll come back up here before we go for a measured move down, which we can draw what that would look like. So if this is the start of the channel and the top of the trading range, it's more likely, well, ask yourself, is it more likely? Here we are on the close of bar 28, II, far below the moving average, over 20 bars into a trend. Obviously the momentum getting weaker. A lot of bars overlapping, looks more like bear legs in trading range. Is it more likely we're going to sell off all the way down here before we come back up here? That's actually not quite right. We go to the market price. What are the odds we go for a measured move down before up here? It's not clearly 60%. And you know, if your trader's equation is not 60%, it's not wise to go for 1-to-1 at less than 60%. That's a negative trader's equation. You'll lose money over time. So if a bear is short on 28, stop above 12, it's really hard to argue going for a move equal distance from the start of the channel because the odds are probably slightly higher. We're going to go up here before down here. Bear reversal bar closing on its low, 29, triggering the low 1 inside pattern below 28, but still not breaking out below bar 25. So still within this range, within the channel. Bears are taking profits below bars. We might dip below 25, but I expect buyers below. For the bulls, still really nothing to buy. 30, so we had a decent looking bear bar 29, but then no follow through 30. 30 tested, actually broke out one tick below 25, and then obviously closed a weak doji. The market's still in a tight bear channel, but there's a lot of overlap. I keep saying it looks more like a bear leg in a trading range, and the odds are higher. We'll go back to the high of bar 12 before a measured move equal to that distance from the high of bar 12 to the market price. Here's the possible trend line, or the channel line. 31 testing the channel line. Probably sellers above, probably going at least a little lower. The bulls haven't had a strong bar, really a decent bull bar since 23, and even 23 wasn't all that strong. 27 and 28 can be considered bear bars. They're sell reversal bars, even though they're bull bodies. They close below their midpoint, so the bears can claim ownership of those bars. So since bar 24, the bulls haven't owned a bar, so that increases the chances. We're going at least a little lower before higher. No bull wants to buy above bar 31, and we have a micro channel since bar 26, so that reduces the chances that we'll find buyers below. Instead, there's probably sellers above. Like I said, probably going a little lower. Inside bar 32, sellers above, maybe buyers below, but still, like I said, there's not much buying pressure. Now the bulls will argue. It's 3 pushes down, 1, 2, 3, with a lot of overlap, but the buying pressure isn't great. The one thing the bulls have going for them here is that we're still far from the moving average. And even though the bears are they're controlling time and price, but the problem for the bears is that they're not able to create gaps. So if you bought below bar 12, scaled in lower, you made money. Bought below this swing low, you made money. Bought below here, you would make money. And that's all the way down. So for here, we're breaking out below 25. So far there is a gap open. That's good for the bears. Bear breakout 33. Still a micro channel, but the bulls might argue 1, 2, 3 legs down. And we're getting a micro channel for the third leg, also breaking out of a channel line. These are low probability. Breaking out of a channel line is about a 25% chance. The bear trend gets stronger and continues. 75% chance. The breakout reverses within 5 bars, and we test the trend line. Where's the trend line? It's a tight channel. We could just be here. But the odds are we'll reverse within 5 bars and test here before we just convert into an even stronger bear trend. Aggressive bulls are buying here, but hard to buy after a micro channel since bar 26 with really not enough buying pressure to be doing that. $34 continuing lower. The bear breakout looks strong, but I mentioned this in my last video. Whenever you have a bear trend or any trend, in this case a bear trend that's gone on for 20 bars, and then you start getting a breakout in the direction of the trend, you have to wonder if it's a measuring gap or an exhaustion gap. And an exhaustion gap would be basically the end of the trend. Bears are hoping it's a measuring gap, and what that would mean is maybe we get a measured move. Maybe from the high of 18 to this micro channel, this breakout point. This would be the measuring gap. We come down here. But like I've been saying, we're breaking out of a channel line. We're getting a fairly climactic third leg. And we're getting further and further from the moving average. You can see price in the moving average over here was good, sustainable. It was basically parallel. But now price is going further from the moving average than the moving average can keep up. That's parabolic and unsustainable. 35 broke out further to the downside, but then pulled back and closed on its high. I said the market would probably pull back within 5 bars and then test the trend line, and that's what could be happening starting with 35. If you sold below 34, you're disappointed with your entry bar, and you might just get out above it. It's strong enough down the first reversal up. Will probably fail, but as far as selling here, the context isn't great. For the reasons I just said, possible exhaustion gap, could easily come back and test the 25 low. What about buying above 35? I would not. Also, like I said, not enough buying pressure. Probably going more sideways here. 36 low 1 short, but possible exhaustion gap, which is a bad location to be selling. If anything, probably buyers below bar 36. 35, as crazy as it sounds, 35 was strong enough for its own second leg. So 36 could be a pause. Maybe we go below it, and that's a pullback before the second leg up for the bulls. 37 going a little higher. Could be the second leg for the bulls. And then what about selling below 37? Well, it's a bull bar, and you're selling you're selling far below the moving average. Do you really want to sell below a bull bar, far below the moving average, when you have a possible exhaustion gap? Probably not. Market's probably going more sideways here. Buyers below 37. And then we went outside up 38. So another bull bar on 38, but 38 possible nested 2 legs up. So leg 1, 35, pull back, and then up on 37, down on 37, and then down on 38, up on 38. On a smaller time frame, it's more clear. This is 2 legs up, and those bars overlap, and that's a channel. So what we could have here is a spike on 35, pullback, channel, and then we could come back down and test something like the 36 low. But for now, what did 38 do? If you were a bear and you sold above bar 36, which wasn't that unreasonable to do, but let's say you sold above 36, and that's your entry bar, you're obviously disappointed. So if you get the chance, you'll probably exit at break even. And we got that tail on 38, allowing traders to get out. Even if they sold the close of 36, they had a chance to exit on 38. And then 38 close on its high. Probably have to go a little higher before we find sellers. 39, we have a tick gap, so the open of 39 is above the close of 38, which is a sign of strength. 39, not a very strong bar, but we do have a 3-bar spike, but also 38 being an outside bar, not ideal for the bulls. Probably in a trading range here, and at a minimum, probably going to test the 25 low. 40, it's a trading range bar with maybe a 1-tick bear body. Low 2 short, maybe low 1 below 37, low 2 40, but it's a trading range bar, probably sellers above, and probably buyers below for a second leg up. 37 through 39 was strong enough for a second leg. And this is tight enough since 35 that it could all be viewed as one leg, especially on a higher time frame. So any pullback could lead to a bounce. We went below 40, found buyers. It's a bad low too, possibly in a trading range, and so traders bought. But then your entry bar is a trading range bar. Now you have a high 1, maybe high in a range, with resistance, the bar 25, low, the moving average, probably sellers above. And then 42, a bull bar closing on its high. So if you sold above 41, your entry bar is bad. 42 should have went above 41 and maybe looked more like bar 40, but instead it's a bull bar closing on its high. Bulls are hoping we get a bull breakout here and break out of the 25 low and the moving average and basically all the resistance to the left. There's several magnets to the left. You have the II pattern, 28 low, that's another magnet. And really all through here. Bar 18 close will be a magnet. Bar 12 high, low of yesterday. Bulls are hoping we can test all of those. It's bar 42. We're about halfway through the day. The bulls are hoping it's a midday reversal. But still, the bulls need to do more. This is still minor. 43 bull breakout. Closing well above. Well, not very far, but wasn't just 1 or 2 ticks. 43 closed fairly above the moving average and the low of 25. That's good for the bulls. If you're a bear and you shorted anywhere, you sold maybe below bar 40 or above 41, betting it was a bad high 1. 42 and 43 have trapped you. And at some point, if you don't get a retest of the 41 high, you'll be forced to exit the position with a loss. So we do have trapped bears now on this bull breakout. The bulls want to keep buying to further trap bears and force them to have to liquidate their positions, exit, and basically provide fuel to go higher. 44, another bull breakout. So far, this is strong for the bulls. Since bar 41, it's a 4-bar micro channel crossing the moving average. Bars are closing above the highs of the prior bar. The bars are uniform in size. 2 of the bars close on their high. There's not much overlap. This is a solid breakout for the bulls. So if anything here, probably buy the close and be long or flat. 45 continuing, still a strong breakout, still a uniform sized bar closing near its high and above the close and the high of the prior bar. There's also micro gaps. And if you sold above bar 40, if you sold the moving average, market has not come back to test your entry price to relieve you, so you're trapped. And then 46 continuing higher. This is a really strong bull breakout, and the odds are it'll get a second leg. Some traders might view this since 35, this entire rally, the first leg, which may pull back and get a bigger second leg or symmetrical second leg. Big down, big up, market's in a trading range. Where's the high of the trading range? Some traders are asking. Maybe it's the high of bar 12, maybe it's the low of yesterday, maybe it's all the way up at the bar 3 low where bulls got trapped earlier in the day and it's a reversal day. But this is a strong breakout, and it's stronger than any breakout the bears had all day. Why is it stronger than these bear breakouts? The big breakouts are a problem for the bears. They're climactic. They force traders to take profits. Whenever let's say you're shorting, taking a chance, shorting bar 3, then you get two big bars in your direction. At some point, the risk becomes too big and you have to take profits. And that happens again here. Big bars, they go your way. Traders scalp out and take their profits. Here, this breakout is actually one more thing about the bears. Look at this. You can call this a breakout because it's a breakout on a higher time frame. But look at all the overlap. There's bull bars in here, lots of overlap, lots of tails, bars with small bodies and big tails. And then compare that to here, especially this part from bar 41 to 46. That's a strong bull breakout. Like I said, uniform sized bars closing on their highs, crossing the moving average, closing above the highs of the prior bars, creating micro gaps. I don't know if there's tick gaps in there. I don't think so. But regardless, it's a strong bull breakout. It's orderly and controlling. Bulls are controlling price and time, and that increases the chances that the pullback will be more shallow and that we'll get a symmetrical second leg. Breakouts continuing on 47, still by the close. At some point, the risk becomes too big. Say traders buy the close, they're going for 1-to-1, but they're going for a profit target all the way up here. At some point, it's really unrealistic and it's not 60%. We're going all the way up here before down here. But this is, again, a strong breakout. I think the odds are probably 60% for now that we are going for a measured move up. More buying 48. What's also great for this bull breakout is these bars are not climactic. I keep saying it's orderly, and the bars they have uniform sized bars. This is almost, I don't know. I don't like to use words like perfect or ideal with trading, but this is a really almost satisfying bull breakout. It's really strong, and it's important to either be long or look to get long and probably hold for a measured move up. 48, the bull breakout's continuing, probably buyers below. When I said it's probably a shallow pullback, I think the deepest the pullback will go is maybe 30%. That's this red line right here. Finally, a pause bar, 49. Profit taking, maybe starting by the bulls. But you know that 49 is a minor reversal, probably buyers below. And like I said, the deepest the pullback will go is probably about 30% before there's continuation. Falling on bar 50, but still minor. Too tight a channel. It's really a spike and a strong breakout. And if anything, traders are buying the close of bar 50. I know it's a minor reversal, and traders are getting a chance to buy lower in the strong bull market here. And that's what happened on 51. 51 is a high one after a strong bull breakout. It's closing on its high. 51 is a high one that is better to buy and go for a swing than to sell above. You can see it came close to 30%. Maybe we'll go a little lower. Might have been maybe a 25% pullback, which is not that unreasonable. We could just continue here as this was so strong. Traders are desperately waiting for any pullback to get long or to exit their losing shorts, and that might be all they get. And then follow through 52. So traders who bought above the high one, decent entry bar. If they sold above the high one, that's a bad entry bar, and they'll probably bail out of the trade. Instead, outside down, 53, possible trading range since 49, maybe an expanding triangle. Even if it is an expanding triangle, probably a bull flag, and buyers below 53, buyers below 51, probably getting a second leg up. Inside bar 54. I say inside bars have a lower probability for breakouts. Breakouts fail and they pull back fairly quickly. But 54 is, since 49 or 48, basically been a sideways pullback after a strong bull breakout. Now this is a high 2 in a bull trend above the moving average. Probably not wise to sell above 54. If anything, traders are buying above 54. If bears were hoping for a major trend reversal, which this is not a major trend reversal setup, this is all minor. But if a bear did short and maybe front run the sell and sold a close of 53, then they get 54, they're disappointed and they'll probably bail out of the trade. 55, another maybe inside bar. We triggered above 54, found sellers above. But as far as selling below 55, I would not. I still think it's a bull flag. The bears are hoping it's a final flag, a tight trading range, maybe a triangle, get the bear breakout, but the bears have a lot of support below. There's the moving average, the bar 51 low, and then look at this spike. The odds are there are buyers below hoping to get long at a better price. But 51 already pulled back about 25%, and that may be the deepest it pulls back before we get a leg 1 pullback and leg 2. 56, it's a high 2 signal bar, maybe a high 3, maybe 3 attempts down by the bears, 51, 53, 56, and then a bull bar closing above its midpoint, 56, for the signal bar. Probably buyers above for a swing. And if you're short for any reason, which is not ideal, I would get out of shorts above 56. I always forget to mention always in real time. And was the market always in long here? I don't think so. I think maybe by 43, and then definitely by 44, we're always in long. And then are we always in short here? No, we're still always in long. Bull breakout 57. Big tail above the bar, so not ideal, but it went far enough that we're probably going at least a little higher, and that there's probably buyers below 57, and that if it does trigger to sell below 57, it's probably minor, and we're going more sideways to up. And then a tick gap, 57 closed to 58 open. So many traders bought the close of 57, the market gapped up, and couldn't even close the gap. If you had a limit order to buy the close of 57, it may not have been filled, and that's a sense of urgency. The bulls are hoping this is becoming a breakout and a measuring gap. And again, what's the target for the bulls? Maybe it's the bull breakout, and you can see if a bull bought below bar 8, okay, they got trapped. That's about where the measured move up is, and so that's a reasonable target. Inside bar 59, high 1, but tight bull channel, similar to what I said over here. Tight bull channel, only look to buy, so your options are long or flat. You cannot be selling here. 60, a big bear bar, but in a tight bull channel. The odds are there's buyers on the close of 60, and 60 is a minor reversal. There's still not a major trendline break. Spike in channel, maybe it's a trading range. We come back and test the 51 low, but that's the best case scenario for the bears. And then 61 went a little lower, testing the moving average. almost 20 bars above the moving average. The bulls controlled at least 10 bars above the moving average, which is fairly impressive. The first test will probably find buyers. But now it's 3 bear bars, so this might get a second leg down, and there might be more sellers above 61. And if there were sellers above 61 and 62 was their entry bar, that is not a good entry bar, and they may look to get out of the trade quickly. Probably buyers below 62. And then 63 is a give up bar for the bears. If they did sell above 61, that's their entry bar. They say, forget this, I'm out. Another another tick gap from the close of 62 to the open of 63. 63, big breakout. Is it an exhaustion gap? I don't know. It could be, but I think more likely it's a measuring gap. And where's the measuring gap? You could draw it from here, like this, all the way up here. Maybe we get a measured move of the flag, the trading range. The point is there are magnets above. And do you really want to sell against bar 63? We're testing the low of yesterday again, but breaking out straight through it. So the market is ignoring that resistance and going higher. 64 is pulling back. Decent bear bar, but bad. Well, as far as selling below 64, it could simply be a breakout pullback. So bull breakout, what's it breaking out of? Look to the left. The trading range here, the bull flag, break out of here, and then look where 64 tested. Tested the high of 58. So if a bear sold above 58, trapped on 63, they might get a chance, if they're quick, to exit. And then we went lower on 65. So big up, big down. This is the channel phase for the bulls. So spike and channel. It looks like we're converting into a trading range. The only problem, there's a couple of problems I have for selling here, and that is that in the past, maybe 20 bars, one bar has touched the moving average, the rest have been above. There's a lot more bull bars than bear bars, and this breakout is really strong, and it'll probably get some sort of symmetrical second leg. I'm not sure if this was that leg. Plus, there's magnets above. It's a possible reversal day. And when you combine the day structure and the daily chart context, you know we're in a trading range on the daily chart. And just looking at this day so far, is it more likely that the bears erase this breakout? I don't know, it's really strong, and they're not really getting the trend line break they need to set up a major trend reversal. If anything, spike in channel, maybe we're converting into a trading range, but there's buyers below, and then that trading range could produce another breakout to the upside. 66 bull breakout, but only breaking out above the bar to the left, 65. If you sold above 65, your entry bar is bad. It's similar to selling above 61, and that could result in traders giving up on shorts. But it was big up, big down, so maybe a trading range here. So then inside bar 67, going more sideways. Not ideal to buy above 67, probably sellers above. And then 68 is a surprise. So if there's probably sellers above, a bad high one, possibly high in a trading range. And then you get 68, you know you're wrong. And if you get 68, which is a surprise, breaking far above the low of yesterday and all the bars to the left here, we're probably going a little higher. And it's dangerous to be scaling into shorts. Follow through 69. Bull breakout and follow through, probably going at least a little higher. Breakout is solid. Couple bull bars closing near their highs. Little overlap. And if you sold above 64, you're trapped. More follow through, 70. It's really minimum follow through. It's a doji. But the bulls prevented a bear bar. And the bears have had really one close in 5 bars, and the one close was a doji. So not great. Selling pressure, tight bull channel. What about a wedge? Some bears might argue it's a wedge, but you have to ask yourself about the selling pressure. And when you look at this wedge, it's made up of strong bull bars. We do have bear bars, so big up, big down, big up, big down. But the bull bars are strong, and the context is bad to be looking to sell because of this strong breakout with magnets above, when it's probably a trading range day. And then where's your sell signal bar? Maybe you can sell below a strong bear bar here, but you need to first get that bar. And then we're getting the bull breakout of the wedge. And the risk here for the bears is a measured move up of the wedge. That takes you closer to the high of bar 1 or the low of bar 3, which could also be a magnet. Well, it is a magnet, and the market may test it. 72, there is your wedge signal bar. Strong bear bar closing on its low, and it's easy to look at this and say 3 pushes up, spike in channel. It's a trading range, we're going to come back down here. But every bar has been above the moving average. And then if you're selling 72, you're selling a maybe 8 bar micro channel, and the odds are there are buyers below. Even though there's a couple dojis here, 67, 70, this is still a strong enough breakout. The odds are there's buyers below, and it will get a second leg. 73, we went below 72 and found buyers. So if a bear did sell 72, they were not getting the follow through they needed. They may have given the bar a minute or so to sell off, but it wasn't happening. And whenever it disappoints traders and hesitates, those bears will just give up. 73 is the minimum second leg for the bulls. Leg 1, pull back, and then leg 2. So will bears sell above 73? I don't know. It's still tight enough up. When it's a tight bull channel, traders should only be looking to buy or be flat. Plus there's a magnet, the bar 8 low, just above. Probably going to go there. Inside bar 74 lowers the probability for breakouts, but probably buyers below. And the magnet above will probably get reached. And then surprise 75, obviously a huge bull bar, probably going at least a little higher. Could that be an exhaustion gap? It could be, but that doesn't mean you just sell the close of 75. It's such a strong bar. You know there's magnets above the bar 3 high or the bar 3 low, probably going to get there after seeing 75. And now this strong bull breakout channel, and then maybe this was the start of the second leg. And then this line up here is the high of yesterday, which maybe today becomes an outside up day, and we test it. Follow through 76. So 75 was a surprise, and surprises are leg count resets, and then you get 76, strong follow through. Here's the measured move. The odds are we're going up here before down here, so traders will buy, put a stop below. The risk is big, but the probability is good. And then you can see 77 went more than halfway to that measured move in one bar. That's really good for the bulls. This is obviously climactic and a surprise. And you mix in all the facts that I said coming into the day. It's the end of the week. It's the end of the month. There's an increased chance the market will do something on any Friday, even if it's not the end of the month. The market will try to do something on Friday to alter the appearance of the weekly chart. But then you also have it being the last day of the month, and then you have the monthly chart to take into account. Obviously, a strong bull breakout, probably going higher. 78. Reached the measured move. 4 huge bull bars, but getting so late in the day. If anything, probably wise to look to take profits as we're getting late in the day. And the market has given you a lot of profit in so few bars. More buying, 79, but getting more overlap and getting so late in the day. Bear bar, 80, profit taking by the bulls. Probably buyers on the close of the bar and buyers below, 79. But obviously too late to do anything. And then 81. buyers on the close of 80, and then a small bull bar. For always in today, might have been always in short on bar 5 or 6. It's a bear breakout crossing the moving average, but the context wasn't great. It was possibly getting low in a trading range. So if anything there, maybe buy low, sell high. But then the bear breakout 9 followed through 10. We're below the moving average, probably always in short, and then no reason to buy really until bar 35 when we had a possible exhaustion breakout, exhaustion gap, and then a bull bar closing on its high 35. Now that doesn't mean we flipped to always in long, but I thought that we were far from the moving average and bears who were short would probably exit above 35. And then I thought we became always in long on bar 43 or certainly by 44. And then all through that breakout to 48 or 49. That's a strong bull breakout. We're always in long and probably going higher. So reasonable to be long and look to exit below a reasonable stop order setup. But in this case, the bears never really got a strong trendline break, and that's the first thing they need for a major trend reversal. So why didn't we have if there wasn't a trendline break over here, let me back up and explain that. The market became climactic here. And remember the difference between the bull breakout and the bear breakout. You've had sell climaxes on the open, lots of two-sided trading on the way down, and then becoming parabolic late in a trend. Over here, really strong bull breakout, and the market wasn't pulling back much at all. So any traders who sold anywhere during this breakout is trapped, and the market's not pulling back very much to relieve them. And at some point, they're going to have to give up. And that's basically what this was. At this point, we're probably going a little higher, and then eventually the bears just give up. So as far as exiting always in long here, I'm not sure if you could argue exit below 64, possible wedge, and maybe 63 was a little climactic. And if you do exit, you get long above 66 again, and then there's no reason to exit your longs until the end of the day. For stop orders today, might have been sell the close 5 or sell below bar 5, going for a measured move down. And then let me scroll back. It's hard to sell bar 9 because you're low in a possible trading range, but it is strong enough you're probably going lower. But for stop orders in here, when it's always in short, you can sell below any bear bar closing below its midpoint. So any of those trades are reasonable. And like I said, if you're short, probably wise to get out above 35, but not necessarily time to buy yet. And then I thought it became buy the close 44, and then all through here buy the close, buy above bars, high 1, buy above 51, buy above 54, 56, buy above any bull bar here. It's always in long after a strong breakout, and then buy the close here. And then limit order trades today. I thought sellers above bar 1, probably sellers below bar 3, and they got trapped on bar 4. After 4 and 5, might have flipped to always in short, and then sellers above bars, but we had that micro channel since bar 3 all the way down to bar 17. So sellers above 17, which got triggered on 18, and then still always in short in there. So sellers above bars, sellers above 21, sellers above 20, triggered on 21. It's a weak minor reversal. The odds are the upside was limited. Sellers above 25 I thought was reasonable. And then the danger with selling after that, like above 35, it's hard to sell above a bull bar closing on its high, and then in that context, even harder. There was a bull breakout from 35 to 40, and that was strong enough for a second leg. so probably buyers below 40. And then, of course, the strong breakout, buyers below bars there as well. And then all through here, the bull channel, bulls are buying below bars and exiting above bars. And that is about all I have for today. Please feel free to leave questions in the comments and include timestamps with anything specific to this video, and I'll be happy to get back to you as soon as possible. All right, hope everyone has a good rest of their night.